According to RBC, the average household income needed to buy a home in Canada right now is roughly $164,000. Here's why they're wrong. RBC recently released their economic outlook for 2023. And within that, they recognized the average income that's needed to qualify for a loan is about 164 grand. It's important to note that would be to get a mortgage approved with RBC. And the biggest thing that we've seen in the past month with news outlets is they're reporting this as if that's the income needed to qualify with all lenders. This can't be farther from the truth. And it's why I think it's important to clarify this for you as a consumer. In the past 12 months, we've seen interest rates rise very quickly. And with that, it's become increasingly difficult to qualify for mortgages. Here's what you need to know as a consumer about how you can buy a home in 2023 without making the $164,000 that news outlets are telling you that you need to make. The example used in the report the news is giving you is based on a profile that would be approved with RBC. What they've broken down is that the average home price in Canada is $630,000 and that you would have a 20% down payment. In order to get an approval with RBC, they're saying that you would need to have a household income of $164,000. If you're looking to get into the market and become a homeowner in 2023, I think it's very important that you take the time to understand how different lenders can approve you for varying amounts. There's hope at the end of the tunnel because when you work with a mortgage professional like myself, I have access to up to 60 lenders in which that we can review and customize the application to fit your needs, not just one lender like what's being presented to you in the news. If we were to have a quick comparison here, and you're looking at this exact same purchase price within the RBC report of a $630,000 home, and you have a 20% down payment, there are tier 1A lenders that can approve you for this loan with only a $90,000 household income. So if you're looking to buy in the next 12 months, reach out to me and we can get you prepared to find the perfect solution for you to buy that property. And if you're a realtor watching this video, I have an exclusive program that will give you access to my team to help make you more efficient in selling properties. This is done through a customized solution for your open house management, as well as tenants to homeowner campaigns, as well as identifying market opportunities to help your buyers get into a home. The final thing that we always want to make sure is that we're giving back to you, and that's done through social media incentives with Vision Lux and Warped Media to ensure that you're getting the most out of your social profiles. The main problem with what we're seeing in the news right now is not the fact that one lender has guidelines in which that you're needing $164,000 of earnings to buy a $630,000 home. The problem is that when news outlets pull this information and give it back out to the masses, they don't actually identify the fact that there are different lenders that will look at things differently, where you might need less income to buy that property. So when us, the consumers, are reading this, all of a sudden this ability to buy a property or become a homeowner just seems so drastically out of reach. To me, this happens far too often when it comes to mortgage-related news or even financial-related news. When it comes back down to it, as we were growing up, financial and personal financial education wasn't something that was actually present in our school system. So a lot of it, we turned to the news to try and get that information or knowledge. And if it's only being reported in one way, there's a whole other side of the brain, so to speak, that isn't being identified or clarified to you. At the end of the day, remember how news outlets make money. They generate headlines to get clicks. So when taking information and seeing a very large number to buy the average home in Canada, obviously that's something that a lot of people are going to click on if they don't have the financial literacy to understand that there's different options available. And that's kind of where I want to come in, is educate as many people as possible to put them in a position that they're now comfortable to potentially buy a home. This type of news reporting, where it's only one-sided, strongly impacts not only home buyers, but sellers of properties. Because if you look at this as the home buyer, obviously, if you're in a position where you aren't making that much money, you're not necessarily going to pursue the opportunity to buy a property. And if you're on the other side of it, where you're looking at maybe selling your home, this might stop you from bringing your house to the market because you're going to sit there and think, well, how many people are actually able to qualify to buy my property given the income level that you need for your household income being that high? This also impacts sellers, because if you're looking at listing your home for sale and you see the average person that could potentially buy your home at $630,000 needs to make $164,000 in terms of household income, and you start thinking within your friend group that's in the same kind of financial place, how many are actually earning that? You might think, no, I'm not going to list my home because there's only a finite number of individuals that could buy it. The reality is, if you are a home buyer, your ability to purchase might be greater than what you might think, and it might just be jaded due to the news and how it's being reported. So my encouragement would be to do your due diligence and speak to a professional to really understand what your true capacity is and where you're comfortable when it comes to your real purchase price. As a seller, the reason that this is important is just because there still is limited inventory when it comes to homes being listed in Canada. And if the marketplace of potential buyers is actually greater than you think, it's a good opportunity to get your home listed, because with less competition, there's still a pool of buyers able to purchase it, and your price is actually maybe more than what you think your home is worth. Now to the important part of this video, and probably the reason a lot of you are still even here, is how can I get the same $630,000 home without making $160,000 of household income? And where this comes back to is different banks underwrite mortgage applications different ways. And what I mean by that is lender one, who in this case was RBC, can qualify you with this much income because they can use more income or qualify you under different guidelines. A perfect example of this is when you go to buy a property and qualify for a mortgage with a major institution. What they need to do when qualifying for that loan is apply a stress test when figuring out your debt to income ratios. This stress test takes the amount of debt that you're asking for and applies a payment based off your real interest rate plus 2%. So if we're creating an example here, if your interest rate that you're really going to get is 5 on the mortgage application, the payment's based on it being 7%. This obviously reduces the amount that you're able to borrow to keep it within lender guidelines. When comparing that to a credit union, they don't have to do this same measure because they are guided and operating under provincial guidelines rather than federal. So with a credit union, there are opportunities to still qualify for a larger amount of money at the same competitive rates that you would get from a bank. This example looks at it from one of the strictest underwriting guidelines to one of the most lenient when it comes to getting you approved for more money. But there's about 30 to 40 lenders in between that all will look at your application differently. And that's why it's important to speak to a professional who's aligned with you to find you the best solution. At the end of the day, it's a matter of figuring out your goals and making sure your mortgage product is going to help you meet them over the life of your loan. So if you ever find yourself reading the news and you see yourself asking more and more questions or looking for a different perspective that might frame it in a way that's easier to digest, I'm available via the link down below so that we can figure out how to get you where you want to be.